as AMC stock looks destined for another short squeeze and on the cusp of getting more economic data and Fed Jerome Powell this week. Couple that with earnings. What is going to happen this week, or at least what is the data telling us could happen this week? That's what we're going to get into here in this video. If that sounds like something you want to be a part of to hear out this information, number one, hit the like button. Number two, subscribe to the channel. And number three, source your comments, questions, or concerns down below in the comment section. And most importantly, I hope you guys had a rock solid weekend. Grab yourselves a cold one or a coffee, whatever you are into, and let's get into this information, guys. So I want to start with Friday, right? Friday, the markets were really good on the cash open. You went from down almost 1.5% to positive at one point. And then about halfway through the day, almost like clockwork, the market started to sell down pretty substantially, and the S&P 500 closed down about 1%. And you can just see the volatility in this chart, and the range was so big you have to like condense the chart to get just to be able to see it all. It was straight up, and then it was basically straight down again. And what you're really coming off of, at least last week, was Apple, Google, Amazon earnings. And Apple really had the worst earnings in my personal opinion. They rallied 2.5%. Amazon down over 9%, including the after hours drop. Amazon was down about 3%. So you're coming off of pretty bad earnings from tech, but it wasn't as bad as what it could have been. You could have seen iPhones just slosh out, right? You could have seen really bad numbers coming from Apple, Google, and Amazon, and you didn't get that. This is not what you would call like a gray swan event. Something that could have happened, that we knew could have happened, that happened, right? A black swan event is something that you can never foreshadow, like COVID shutting down the global economy. A gray swan event would be like, yeah, we know earnings could come in bad, and they come in a lot worse than the bad expectations, right? That would be like Apple giving us a $50 billion quarter when they were expected to give us a $120 billion quarter. That would be like a gray swan event, right? Even maybe a black swan event. That did not happen. So long story short, earnings were better than what they could have been. Even though they were still bad, it wasn't bad enough, in my opinion, to get the markets to really brush off what the Fed is doing. The Fed basically on Wednesday gave you a green light that the stock market is okay where it's at. Financial conditions being at the loosest point they have been at in well over a year now is okay, because Fed Jerome Powell said they're starting to see more rock solid signs that inflation is coming down, and they're really only concerned with one sector of the economy as far as inflation is concerned, and that's services x housing. Now, why do I bring all of this up? Well, you've kind of seen a negative reaction from earnings and a very positive reaction from Fed Jerome Powell. I think you mix the two together, and earnings weren't bad enough to get the markets to really crash. And why that's key for AMC is if we go ahead and pull up AMC on the 1 minute candlestick chart, like we did with the SPY, the S&P 500 index, AMC's chart pretty much followed the broad markets, like to a T. You're super bullish once you started trading, almost moving up $1 from the pre-market lows, and then you sold almost all of it off, including the move in after hours. You gained 6 cents on Friday, up 1%. The S&P 500 down over 1%. That's a very positive day for AMC, but in the grand scope of things, AMC is going to be very dependent on what the markets do. If the markets are rewarding good things and they're in a bullish, optimistic kind of, environment, AMC has the potential to rally a lot harder, especially as financial conditions continue to loosen. If you go through a crash in the markets, I mean, it's going to be pretty hard for AMC to rally or to really hold its own. What we seen on Friday was a good example of what AMC can do. Markets down a lot, AMC positive on the day. So that was a good development. But long story short, whatever way the markets are tilting on any given day, it could add to a rally or it could add to a downside move. Now, I think a lot of people are excited heading into earnings, and they're excited in the hedge fund world for the ape vote to convert ape into AMC, and I think that alone could give you a little bit more stability. Now, we could sit here and debate whether or not we want the conversion to actually happen. It's positive on a fundamental basis. It's negative for dilution in the stock. At the same time, you're going to get a reverse stock split, and that could cause a positive reaction in the stock. There's really a good argument for both sides here, and I truly do see both sides of it. That's why I'm kind of neutral on it, right? I see the good, I see the bad. I don't think either one is super, super bad or super, super good. So I'm pretty much neutral on the whole thing. Now, if the markets continue to stay in bullish territory, I think that's going to give us a very bullish reaction. Now, as far as this upcoming week, one of the biggest things to watch, in my personal opinion, is how AMC reacts now that we are on the threshold securities list, now that you have a lot of FTDs coming due in this next week. So for Monday, you're not going to get any FTDs that come due as far as the T plus 35 settlement date. But coming on Tuesday, you're going to get 1.8 million shares. On Wednesday, you're going to get 1.7 million shares. On Thursday, you're going to get 716,000 shares. On Thursday, on Friday, 861,000 shares. All of this will have to be bought by market makers, by hedge funds, whoever needed to close out a position that was not able to. Typically, when AMC does go on this threshold securities list, you do see a very big rally, and the rally can really last weeks. It can start 1 week and continue for multiple weeks with the slow and steady build up like effect as people do close out of those, failure to deliver positions, and then ultimately you get the big rally. You get a couple days that are like 40% gainers once you've already risen in price. So I don't necessarily think this week is going to be the week you get a 40% day. It's very well possible it could be, and if there was any day for that to happen, it's probably going to be on Tuesday or Friday. We'll talk about what major events we have on Tuesday and Friday, but I think this week's going to be a week where you kind of make your way to the upside before the next following weeks you could get a bigger move to the upside. Now let's go ahead and take a look at the Ortex data. Then we will get into important data and events that will be happening this week. So I think one of the biggest stories as of right now, besides AMC on the threshold securities list, is the cost to borrow numbers. The cost to borrow average of 444.5%, cost to borrow max of over 1,000%, cost to borrow minimum on Friday was 473% at one point to close out the day. It was at 7.26%, but Interactive Brokers has us at 385% cost to borrow rates for their clients. So you are seeing these numbers from Interactive Brokers, a real exchange, a real, brokerage at almost 400%. That is putting a lot of pressure on existing short positions within AMC. You're also looking at a live short interest of free float at 22.79%. These are pretty much the same numbers that you've seen back in June of 2021, the last time AMC stock went up 10x in value. Now, let's move on from all of this to look at important things that will be happening this week. And you don't have a lot of economic data really at all, but you have some important things. So Monday, you don't have anything. Tuesday, you're actually going to get Fed Jerome Powell. That is going to be the big story, and you're going to see this right here coming at noon, about 12:40. Fed Jerome Powell's speech, and he has the opportunity here to kind of correct anything that he missed out on during the press conference. For an example, if Fed Jerome Powell really didn't want the stock market to rally to happen, he's going to come out and say some things that the markets don't like, right? That's just the flat out honest truth. If he was trying to convey a message the markets did not pick up on, he's going to make it very well known on Tuesday. Now, if Fed Jerome Powell doesn't really say anything the markets don't like, I think that's going to be a further confirmation and continuation of this bull market. I mean, if Fed Jerome Powell does not bat this market down, if he's comfortable with stocks ripping, then that's going to be a very positive thing for the stock market. Now, you're really not going to have much on Wednesday as well. Keep in mind, you're going to have multiple Fed speakers throughout this week, so I don't want to go over them individually, guys. Use Trading Economics calendar for all of your data needs, right? Because there's going to be a lot of different Fed speakers every single day. They can move the markets. Odds are, though, if they say something that will move the markets, you're going to hear about it on CNBC. You're going to hear about it in, Discord chats or wherever you guys get your information. You will hear about it. I don't expect it to give us a big move, though, unless we get new information. And that's the risk with Fed Jerome Powell on Tuesday. He could give us new information. Now, the biggest data point that we're going to get next week will be on Friday, and this one will be big. It's the Michigan Consumer Sentiment Survey, preliminary survey for February. Now, this is the big part. Michigan 5-year inflation expectations. The last reading we got was 2.9%. This reading that we're expecting is 2.8%. So this is what people expect inflation to run at over the next 5 years. If this goes up, let's call it 3% or 3.5%. Markets are not going to like that because inflation expectations lead into inflation, actual inflation. So that's going to be the biggest thing to watch as far as economic data in this next week. All things considered, if we have a good week, if you don't get anything from Fed Jerome Powell, that could surprise and crush the markets. If you don't get anything from the select few earnings that we're going to have that can be important to the markets, if you don't get inflation expectations going substantially higher, well, that's probably going to lead to the markets continuing to go higher because this soft landing narrative has really started to take shape. We're going to look at the technicals just in 1 second. I do want to go over some of the earnings for you guys. The big companies, you can also use this tool, Earnings Whisper, over on Twitter, breaks down all of the biggest earnings that will report earnings in, the following week or the week of. So definitely use this tool as well. Monday in after hours, you are going to get Take-Two Interactive. You can think of, GTA, right? You can think of, Rockstar Labs, is that who makes GTA? I don't know. Take-Two Interactive, that's basically what that company is, right? Activision Blizzard, you guys know the deal with that one. Tuesday pre-market, Royal Caribbean Group, BP, Hertz, DuPont, not really important companies for the broad markets. Tuesday and after hours, you have Enphase, Chipotle. Wednesday pre-market, Uber, CVS Health, Wendy's, Yum Brands, Under Armour, again, not super important companies for the broad markets. Wednesday and after hours, you are going to have Disney, Affirm, Robinhood, and MGM Resorts. And then Thursday pre-market, you're going to have Pepsi, AbbVie, Canopy Growth, Philip Morris, Duke Energy, Toyota could be big for auto sectors, and that's really what you guys should be thinking of here is certain sectors, right? Affirm earnings will affect all buy now, pay later companies. Walt Disney, that's going to affect entertainment and reopening stocks, for lack of a better word. BP, Energy, Enphase, Energy. PayPal is going to be reporting earnings Thursday and after hours, as well as Cloudflare and Lyft and Expedia. So that could actually be a very important one to the markets, but it's not like last week where you got Apple, Amazon, and Google that all reported earnings at the same time. And relatively speaking, the earnings were okay. I think at the very least, not bad enough to give us a full-on meltdown in the markets like it could have done. Now, let's take a look at AMC, given all of that information is presented to you guys. On the high-end note, for this week, if all things go good, all things considered, I don't necessarily think this is going to be the week where you get, like over here, 2 18% days back-to-back, or another 20% day right here, or another what is this, 45% day right here. I think you might see some decent candles, like this is the rally we seen in March of 2022. I mean, you might see some decent candles, but I don't think you're going to get that big short squeeze kind of candle or the big gamma squeeze kind of candle in this week. I think at the very least it will be slow and steady to the upside, and I would target that 200-day moving average for this week as a bullish case. Now, if you get just really like a couple pennies higher from this point, you're going to break above this downtrending level of resistance around 665. And when you get there and break that and hold that and actually close above it, that's going to be a very bullish sign. Very bullish sign heading into AMC earnings in the early part of March. So best case scenario, around $7.80 this week, at least in my personal opinion, considering there would be more rally to come in the subsequent following weeks leading until earnings and most likely after earnings. On a bad case scenario, guys, good thing is you're above your 50-day moving average. So the 50-day moving average at $5.58 is going to provide you a lot of support, and that would really only be limited downside from here. So I think that's kind of the worst case scenario. Granted, unless new information comes out from Fed Jerome Powell and markets take a dump, if all things go smooth and it's really a neutral market, right? Maybe some good days, some bad days. Let's say more days are bad than not. I would target that 50-day moving average. Or you're going to target that 200-day moving average to the upside, but I do think you will see a move to one of these major moving averages. Hopefully it's a move to the upside. Who knows? Let me know down below in the comment section, what do you guys think about all of this information? Thank you for watching. That is it, baby. Khaleesi, say hit the like button. Hit the like button. Oh my gosh, she is on it, guys. Hit the like button. Thank you for watching. I will see you in the next one.